Morning. Let's see. Give me a second here. You should see and hear me. Let me know if you do. Oh, we've got a pretty good turnout this morning. Let me know if you see my charts or hear me, please. So I know we're working, we're functioning. Type in the question box, please. Somebody. Okay. Are we working? I'm getting no response from you guys. If you can see me, all right. Thank you. Yeah, we got to make sure we're working. All right. And we'll start in less than a minute. Get going. All right. Let's get going. All right, so we're all set. Welcome. If you guys are not familiar coming in for the first time, I do these public webinars once a month. I'm on staff at ElliottWaveTrader, and you can check me out. You can see it in my profile on Twitter, and we do free trials without any. We don't bug you. We don't call you if you don't want to sign up after looking into it. But also, I would say. Despite, never mind, crypto waves, there's a huge amount of value on the site. I trade with the analysis of a lot of my colleagues. Got a few favorites in terms of how they meet with what I trade. So you might be interested in it. And then you can check it out for free, 2 weeks, no credit card. It's pretty cool. That's how I ended up being a member and eventually on staff. The rest is history. As usual, this is not financial advice. I'm going to say very clearly, while I could say I won the the war in trading, I have not won every battle. Take a lot of bruises. Everything I say to you today could end up being wrong. I promise you that I course correct. Some of the things I'm going to actually share today where I have been wrong and where I am course correcting. And some of it actually is more bearish. Surprisingly, some of you guys who criticize me for being very bearish, I'm going to say in a couple charts here I wasn't bearish enough. So, and that happens. That's largely where I've been wrong, which actually is even surprising to me because I listen to myself and sometimes go, man, I am bearish. And so there's lots to talk about. In terms of crypto, I'm only going to talk about Bitcoin and Ether. I see a lot of interesting things in equities, again, mostly on the short side. And so I'm going to talk with a range in terms of range of crypto. A couple housekeeping items. I'm going to share my positioning also. I want to do that just for fair disclosure. So, anytime I'm reviewing a chart, whether I have a position or not. So being plain Jane about that. Other housekeeping, particularly for members, it's been a busy week for month for travel. Just got off vacation on Monday. I'm headed to the Money Show to give a talk. If anyone's Vegas, come see me. Although I am flying in the morning, talking in the afternoon, and leaving in the next morning. I don't really want to be away very long. My talk is at 4 o'clock, I believe. Double check the schedule. I think, man, I forget which hotel we're in. So I'm not even straight, but I know I've got a reservation at Caesars. So maybe it's in Caesars or Paris next door. Probably Paris is where it was last time. So Monday, Tuesday will be tough. Again, I'm getting in on a plane in the morning. I will post that night after my talk. I will post midday if I can, between getting off the airplane and doing my talk. And then I will post in the evening. The nightly report for sure will come in late. And then Tuesday, I get off the plane and go to a physical therapy appointment. Yay, me. Hurt my shoulder a few weeks back. So I will, but it's going well. PT is going well, even after a couple appointments. But I got to do that. And then I will be back online posting on Tuesday night. Let's see. So disclosure. Just in terms of spot coin, I'm still long Bitcoin. You guys know I'm always long some level of Bitcoin, even though I'm a Bitcoin bear currently. I hold Bitcoin, cold wallet, and then also I bought into the February lows, and a lot of that's underwater, although not terribly. So I am long spot Bitcoin. I'm long spot Zcash, and that is all of my long spot trades right now. There's some I'm interested in, more short, more midterm, but they're coming down right now. I do have some Solana, but that's like, and I have like scrap Ether around. They're just in DeFi wallets, so I can do DeFi. Although Solana, I have a delta neutral long interest rates in DeFi, basically interest rate arbitrage, which I've done forever. Doesn't make a lot of money, but makes slow money over time, and it's a safer way and safer than banks. So I do that, and that puts me in a long Solana. At the same time, I've got Solana debt, so it's kind of this weird delta net position. That is it in spot. In perps, I'm short XRP right now. That trade's not going that well. We'll see if it could play out. And then in equities, I am net short MSTR through a calendar spread position, not a big giant position. I am nominally long coin, although my interest is getting short, and I'm going to talk about the short setup in it. But that's just what scraps left over from my long-term position in coin that is not completely sold, but it's super tiny. And I think a big disclosure is I'm going to go through CRCL and talk about that trade, because that chart I was wrong on, and I am flat. I was long the nominal levels of CRCL, interested in getting long at support. That support has broken. It is key long-term support. It could get a stick save, but I don't want to sit around sitting in the stock, with hopium for a stick save. I'd rather take my bruises. Although I looked at my position, I made net money over the year, so it's sort of irrelevant. I just took out the last little bit I had. I've traded that one pretty darn well, so I did not get out at a loss, which is amazing when you're sitting down at support. But we're I want to talk about trading a little bit here to help people understand how to use Elliott Wave charts best. As always, I like to go over that. It's fun. People get light bulbs firing off, and then they realize what the value of Elliott Wave trade or Elliott Wave analysis is, and it's not that it's a crystal ball. It certainly is not. But it is great for risk to reward. All right, so any questions, comments? Let's see. I think a lot of you guys are just saying hi. We got a great turnout. Gosh, why are you guys all turning out now when this market's so bearish? Maybe you have some hopium, I don't know, but I hate to disappoint, because we've had a very low population in these webinars since the bear market started. But maybe you want to hear what the ardent bear has to say today. All right, let's jump in. Bitcoin. So there's going to be big discordance. I'm going to say this right off the bat. There's going to be really huge discordance off of Bitcoin and Ether. I think this is a really important point, and I've even been called out on it by subscribers. I say called out in quotes because no one's being hardcore about it, but I see real big discordance. I want to be very clear about that discordance. It's very easy for my view of either Bitcoin or Ether in the short term to break and follow the other. For sure, Bitcoin and Ether over a period of time tends to correlate on a given day, maybe even a given week. I would, again, I've been very clear how weak Ether was on the macro level, and for sure, it proved that out to me in the way it ended that bear market really badly. Didn't miss the target completely, while Bitcoin nailed my long-term target, right? You guys know this. So that may be continuing to play out on a more short time frame, or I'm just completely wrong about the smaller time frame. So I want to point out that I'm going to go into that that divergence, and then maybe you guys chew on it and ask some questions. But don't get me wrong, that divergence could break. It can completely break. And basically, I see Bitcoin as potentially very, very, very short term bullish, meaning it has a little more upside left to go over the next month, but that can easily break. And then Ether, I have a bullish alternate, but I find it low probability. Okay, so I would expect it to follow the downside approach more. Okay, Ether, the Bitcoin pair, honestly says I could be right because it's very bearish, right? Ether Bitcoin pair looks like doo-doo, and I'll go over that chart. So let's see, but I just want to point that out because this always makes people lose their mind. Like they just don't understand how I could analyze from this perspective. And the answer is simple. I could be right on both, wrong on both, wrong on one, right? Like any given time, especially the more shorter the time frame is, it's where Elliott Wave sees a lot more. Receives a lot more information from the market in a faster time frame, so that it can change more rapidly. But I'm giving you the picture I have right now. And then always in trading, there's no crystal balls. All you're doing is making anyone in trading is simply making an expectation of the future based on the present, right? And it's a probabilistic bet, and the key to trading well is risk managing when you're wrong, really. You know, I'm always going to tout the book. I don't think the book's perfect, but Tom Hugard's The Best Loser Wins, right? The one that has the tighter losses is generally the one that has the bigger wins in proportion to tighter losses. Sort of, you know, focus on losing well versus winning big, which is, you know, most retailers, probably half people on this call, I'll be honest with you, are probably in that, you're wanting that big trade. And I make my money off lots of tight losses, and when the winners work, they work well, right? So it's diametrically opposite to what most people trade, and it's nothing more difficult than that, but it's the most difficult thing to do in human nature because everyone hates to lose, right? All right, so let's go. You know, there's not much that's changed on the weekly. I mean, I've given you weekly, daily. You know, I've given you very bearish views. I'll just say there's a couple things to point out, and I wrote a big article. I would check it out. I do see the recipe for the 4-year cycle starting to break. The 4-year cycle is causing for a low this fall and a low of the cycle. What I've seen dramatic, there's one thing that's confirmed already that is different, is that the weekly RSI is below 30, and that has classically created a cyclical low. So you would say, okay, well, if the cyclical low is to happen here, well, does it hold the 4-year cycle or not? Because it never really got to the fall. The thing is the structure that we have here in front of us is not likely to hold. So most likely, that's the first thing to break, is that low weekly RSI is not the cycle low, right? That's the first thing that is likely. Again, probabilistically speaking, okay, you know, if we set up over 80,000, start seeing bullish consolidation over 80,000, I'll be looking for a new all-time high. So don't get me wrong. I could actually be wrong on that, but right now, presently, we do not have. We have some short-term bullish action. We don't have some long-term bullish action. And you can see it very plainly. We had a really heavy rejection low. I wanted to, you know, first of all, I was wrong in wanting a larger B wave there. I see this B wave as largely needing to restart. And the alternate is that this is the B wave, meaning these are the same. It's redded, but it means the same because it's the same number degree. Okay, you can see the letters are the same. And I'm wrong about that, and we're about to get a bomb. Right? And instead of rallying over eventually over this high here, we stop at about 75 to 76, and then we get a bomb. And this one, that would make most likely now, if that's the case, this is our one right here, actually. So that is now, if this is fast enough, could find a low this fall, right? Possibly, if this is fast enough. I neither am tied to this being a 2 versus an A right now, and I'm not even going to know what it is until we have a drop out of this level. We could start dropping now. That would change everything, and I'll talk about that. But I don't see that likely at the moment. And so this is going to decide whether we have a larger B or we get the bomb. I'm just going to call it the bomb right now, which is the red path. And so if we get the bomb fast enough, yeah, sure, we could find a low in the fall. Although I see this as not a cyclical low. It might feel that way if this B would restart from down here, because this correction still needs a B wave in my view, and or at least a more reliable one. And so it's possible that the cyclical low is actually an A wave in a larger correction, right? So we could start the B wave from here, go to all-time highs. Everyone says, yeah, the 4-year cycles are still on, sure. And then, but it doesn't get us to much. It may not even get us to a new all-time high, or if it does, it's only nominal. So there's a lot of ways still that, you know, and I'm going to be very clear. There's a lot of things going on here. That's the nature of corrective waves. This is where everyone gets frustrated with Elliott wave, because you're in the middle of the ABCs, and the ABCs are an evolving game more than an impulse. An impulse, we set the target. You guys know I had 125 as a target for all-time or cyclical high. Boom, hit it. That's the reliability of an index of an impulse. Impulsive structure. Now we're dealing with corrective structures. Everything is evolving. Everything is adaptive. People get on me, my case for my accounts changing actually, they haven't changed nearly as rapidly as they have in the past, but they get on me about that. This is the nature of Elliott wave in the middle of the ABCs. Okay, so you just have to be used to it, and then you have to pick your locations in terms of trades very carefully, like way more carefully this game is harder. Do some more hedging if that works better for you, et cetera, et cetera. It's a very more difficult. It's a difficult place to trade, and so yeah, so be careful. So that's where I see this now. Really the first question is, how high up here do we get? Do we break down more immediately? And I'll talk about that. So let's get into the hourly. So we zoom in. So one thing that's very different about Ether, where I see some heavy discordance in Ether versus Bitcoin, is this is a new local low where Ether does not have this. It has a slightly higher low, but only nominally higher than the June low. I do have 5 waves to here. Again, if we count this the low versus this low, if I count this low, it's an ABC. I'm counting this because it's a fresh low. I'm just sticking to like very typical. Let me get these off. Very typical method in terms of Elliott wave, and calling this the low from where this count starts. And I've got 1, 2 there. I'm gonna get rid of this ABC just for simplicity. And then we have a potential secondary 1, 2 that it's not very clean, but if we get another fifth, I know this is all really hard to see, another fifth into this one, pretty reliable nano, I'll call it nano versus micro long setup. And we took a long yesterday. I got stopped out very quickly. I put it extra tight because I was not sure of the setup, but then it got away from me while I was focusing on my index trading. And sorry guys, it did get away from that. But Jason called the trade earlier. I think he called it back here, right? And he tightened the stop. Did he get out? I don't know, but he did a better job trading this than I did. Jason, for those that don't know, is co-lead of the service itself. So bottom line is, if we get another wave here higher, roughly around 65, and pull back correctly into, I'm going to take another shot on the long side with some perps. Okay, not an aggressive position by any means, small, but could capture this move if it does go higher. Nominal target is 75K if this does work. If it breaks 62,690, I'm at least looking to see if it holds one of these levels down here, 6450 and 59,200, for a reset of this circle 2. Again, this nano looks good to me right now. Sitting it here still needs a fifth, but it looks really promising, so I'm very interested in it. But yeah, it may evolve poorly over the weekend because it still has a little bit more to go in terms of kind of brass tacks down to a gnat's ass finishing of the setup on the nano setup. So we'll see how that goes in there. See if I see anything else to it. Again, back to the macro chart. Again, as I was pretty clear, whether we are going to go higher for the next month or so really depends on what happens here at this so-called B. There's possible that by the end of it, I see that as a 2, possibly. That's always possible, but right now it should be a B. And why does 2 versus B matter? 2 will have a much longer projection, and the third wave, B wave, will be a much smaller projection. But that said, this B could take it up into the 80s, 90s. But to me, in the middle of corrective waves, I don't want to get too excited about this until all of the structure fills in and the setup is right. It's just a wait and see. This is I'm trading more short term than I usually do. I'm reducing my exposure to the long term where it makes sense, and very much taking setup by setup, because that is the simple nature of trading these types of structures. Now, worst case, we break this low setup 6090, 6450 goes, 59200 goes, and then we're down here at 54K. That 54K was my expectation over the last month until this formed a potential 5 waves and continues to do some bullish consolidation above it. So this was my main point of view, but every short setup ended up being bought, and now it's going from those rejections of those short setups to building, slowly consolidating, potentially bullishly on the micro. So this is no longer primary. I mean, this is again a great place. If you want to say I was wrong, whatever, course correcting, all of that. That is necessary in trading. That is where I stand over the last couple of weeks. So I'm not expecting to see 54K. In fact, more than likely, if it gets up to 75, it's the other way. It's going to go straight through 54K and all the way to 30. And then again, we'll see if we get a cyclical low. You know, I'm only calling that because everyone's going to believe in it. I'm already of the assumption that the 4-year cycle is dead. But other than it holding the high perfectly at 125K or 126K, that nailed the 4-year high. Elliott wave and cycles work together there. I actually think they break now, but again, let's see. You know, again, I don't really care about the 4-year cycle. Doesn't matter. I would never bet on something so religiously on a time cycle without price behaving and saying it's reasonable. I would never do that because price is king, not cycles, not time, not anything other than price. And so I wouldn't do that anyway. But these are like kind of like academic wags to me, like just, you know, exercising the mind for fun, putting the puzzle together. And some of me, I'm just making fun of people on Twitter that hold to time cycles so religiously and dangerously, if you ask me, without having a view and understanding, clear understanding of price structure. Yeah, so it's a little bit of rage baiting for me personally, although, yeah. All right, so that is Bitcoin. Oh, and then I would say I wrote an article around the whole cyclical thing. So check out my Twitter feed. I talked about I call them the sacred cows of Bitcoin trading, and how the market seems to be undermining them right now. But some of them are confirmed and some of them are not. So it's very much like a snapshot. And I may do a article down the road, like sacred cows too, like what did transpire from my theories. You know, and again, these are just fun theories to me. But they're dangerous theories if you hold to them so religiously, right? We've seen what happened to Plan B and his stock to flow, and how everyone's very angry with him and don't want to hear from stock to flow. And the problem was that he didn't offer a lot of risk management. That's my bigger issue. I don't have an issue with the theory. It was a functional theory at the time. The next one is power law. Apparently, power law still is alive, but when I look at the levels, it's kind of broken. So, okay. Anyway, maybe that's not such a useful model if it's so flexible. I don't know. You tell me. But it seems to be busting to me. One of our subscribers suggested another form. Forget what it was. It was based on inflation rate or something like that, adjusting the power law. Okay, those are all fun theories, but you know, to me, I'm just having fun with it, and I suspect power law will be utterly broken by fall. But you know, if a theory is so adjustable that you can't actually risk manage, it's not a functional theory. It's only an academic exercise, right? So at least trading risk management is number one. All right. That's that. So let's go to Ether. And again, discordance. You know, again, I don't want to go over the daily of Ether because I had ad nauseum. You know, again, this is the one that proved to be weaker than I expected, missed the long-term target. That's so much as history, right? It's ardently bearish to me from a long-term perspective. I expected to see somewhere between 300 and 800, 380 during this cycle. I know that's crazy talk for Ether bulls. That's what I expect to see. You know, again, let's see. There's a chance that it holds around 300 and then takes another shot at 10,500. I'm okay, but like right now, there's nothing terribly bullish about action. So it's kind of like you're talking about the long term right now when the short term is super bearish doesn't really make a lot of sense. I do. So again, I talked about the divergence in these. You got a roughly double bottom, but slightly higher here. That doesn't allow me to reset the count from bottom here and count this up as 5 waves on its own. It technically has to be an ABC unless this was a truncated 5th wave. Okay, that's possible, but so rare and unreliable that you just cannot take it as a point of view, you know, as a starting point until it proves otherwise. The only way that would prove valid is if it holds 2 here, which is at 1595 and rallies. Now, interesting, we have a lot of bullish consolidation up in Ether, but we have an impulse off the high in Ether. Jason rightly called that out yesterday. I didn't label an impulse. It's an impulse. So we expect this to be lower. If that's a proper interpretation, we expect that to be lower and for this move to continue lower, even though Ether is consolidating. You know, you can see that flat correction that it's taking on up here and supposedly could break down. Supposedly it will break higher while this one is expected bearishly, but it can happen. You know, I talk about the degrees of correlation where they may correlate together on a given day, but the degrees of one may decay while one is going bullishly. So they're ultimately going day by day a different direction, and we're seeing that in MSTR and Bitcoin right now. You know, where Bitcoin presented higher highs last week and MSTR did lower highs, and everyone that's over correlating the two are missing that sort of shift. I talked about that on the webinar last week. I see the same thing here, although this high is higher than Bitcoin relative to here right now, but it's flipped with a impulse and in context to what I said about this low. So it's putting together a lot of puzzles of the structure and saying that this should go lower. And if it breaks over this high, that would be one way to invalidate that. And that would more likely turn me pretty bullish about Ether long term. That said, that would be very short-term view. I mean, it's just, again, the long-term of Bitcoin through vis-a-vis Ether is like demonstrably the other way. But short-term, it may be more bullish than Bitcoin if it breaks over this high. All right, so let's see what happens here. Again, corrective push higher. Bitcoin could start pushing its third, and then this B wave in Ether or two could rally. Again, that's one way the degrees could work out. And then when Bitcoin takes a little pullback, Ether takes a stronger pullback. That's one way this could work. If it breaks 1595, it should take, again, what has been my primary view is that we should see 1400 to 1200. You know, so I have got two different directions here over the next week. I expect lower and don't see it any other way right now. That can change. And then the question is, what level does it hold, and what level from which does it show an impulse? Is it above 1595, or is it above, or is it all the way down in the 1400 region? Ether Bitcoin pair, again, noticeably we have another potential rejection low here. I did have to adjust the count from a AB to a 1-2, but we have another potential rejection. We'll see how it develops. It certainly looks impulsive, just like the US dollar chart after a corrective, you know, sort of sideways to up movement. So one thing I'm kind of interested in a play, given all of this context, is a equal notional value short Ether, long Bitcoin, which is basically a synthetic way of trading this pair. That's actually the trade that interests me, and it's also highly tolerant, pretty capital intensive, but highly tolerant to because the relative volatility of the two of them is smaller than the relative volatility in US dollars of each one. Okay, that's a mouthful. If you need me to unpack that, let me know. So I'm interested in that trade, and then putting a tight stop on each one and let the one that I'm wrong about fall out, let that trade fall out while the other one should run, or just manage the notional value of it. So as it drops, become more notionally, as if they drop together, for instance, become notionally long Bitcoin to kind of balance the trade out. I've been thinking that way. I do trades like that quite a bit. I may pull if I'll design it for subscribers if you guys are interested. Again, those kinds of trades can be hard to manage. You do want to keep your net capital exposure low, but at the same time, the margin requirement the margin requirement is higher because of the capital, but the movement of your margin levels is relatively small compared to US dollars. So sort of a little this, little of that. So that's about all I can say about Bitcoin and Ether. Again, remain a bear. There's a lot of story that needs to be written about this on the micro. A bit of a wait and see this week, with probably the most likely trade to happen is either this notional value play or the long Bitcoin side. I don't see a reason to short Ether clearly, except with a little more corrective rally in the micro, and so I may short Ether down the road this weekend. That said, I'm traveling, so I'm very cautious about calling any trades right now. Again, any trade I do call is not financial advice. What I'm trying to do is give you guys the risks of the trade. You need to view it versus your portfolio. Again, I urge everyone not to risk more than 1% of their account on some short-term aggressive trade at least. Long-term portfolios is a sort of different matter to me, but yeah, be very careful listening to anybody, and that includes me, because it may not be right for your portfolio and what you're doing. Given that, any questions? So it was a great article. Thank you, Scott. Appreciate it. Any questions, guys? Still, everyone's hanging on here. Any questions coming out from all of this? Discordance, comments on it? Okay. All right. So next stage, again, I don't find a whole lot interesting in crypto. I need to go back on all the sort of uber bearish charts that I have been watching and I've kind of lost track of: Sui, Shiba Inu, Near, all of that, and so need to catch up on that. Travel, I'm sort of behind on all that, but I've been really down checking out the equities in this area. There's a lot of interesting things to talk about, so we'll do that. And so first thing, talk a couple. Let's do MicroStrategy first, or strategy. I've been very bearish on the charts. I believe the last monthly webinar, I don't remember, but over the last month I've called out 106.30 or 20 as resistance. I was surprised to see what a tap on that, and then so far it was nice three-wave top, and so far we have some consolidation. I am currently in a calendar spread that is using the vol variance of earnings. Subscribers know what that is very, very well. It's my favorite option play, is to use the vol variance between the strikes that straddle earnings. And so that calendar spread is working for us. It's profitable right now. I don't want to be in the trade if we break over 2. I think I got to stop on the trade of underlying going over 103 or something like that, or 102 something. At any rate, it definitely has a tight leash, but currently in profit, mainly by the use of the vol, not so much the movement of it, because it's only moved down a little bit since we took the trade, which is very close to resistance. That's hardly moved, but the trade is nicely profitable anyway. If we break over 106, I did adjust the count. Even though 106 hold, I was looking at it and I see this more having a tiny 1-2, so that's changed a little bit. It fits better with the structure that we have, fits better with the 8 we'll see that we have. So there's a slight correction. That's sort of academic when the market is still holding the levels that you've called out. I don't even imagine being long MSTR until it gets into 38. And honestly, I don't know if this 4 will hold or it will be much deeper for the long-term chart of MSTR is a diagonal. We would expect the 4th to be very deep. I don't think it's invalid until like 10 or something like that. I don't know if it'll go that deep, but what also may happen is it goes from this 4 to all-time highs as a B wave, and then comes back down to this region too. So there's a lot of things that can happen in the long term. It's sort of noise now at this point in time when you're staring at a chart that's stair-stepping down. From my standpoint, yeah, it's stabilized a little bit, but it's done so correctively with a very strong 3-wave top into this 4. So it still supports my point of view for now. Again, over 106. It's not that I would want to be long. I'd want to see 5 waves, which would have to be a diagonal, since the first wave would be 3 waves into that 4. That's the only thing that would get me long, and I would call that an early bottom and potential 4. But and so it would have to get a lot farther. There is, because of this too, there's a reasonable resistance here at 137 with this recount, but it's not like I would want to be short between 106 and 137. That would be kind of ridiculous, right? Hopefully you would think so, but I also wouldn't want to be long. So I would call this no man's land. Like we say that a lot, and it's like it's not long. And why it's no man's land is not so much that the level is a problem, it's just that the correct structure we have here is corrective. So I wouldn't call it no man's land if this was an impulsive move off the low, but it is not. I would want some kind of leading diagonal over 137 for me to be long. So I'm giving you all the ways that I can be wrong, and so far the market has not said that I'm wrong. So, but at any point in time, certainly can change on me, right? All right, so that one's interesting, and I mean, this is one where I warned about it the last public webinar, I believe, and that was my point of saying I'm wrong about this, and yeah, I've been right about being wrong so far. Because again, I had wanted a larger B wave up into 200, and that has not materialized. Of course, the news helped. I'm short right now, and I had to take a loss on the remaining longs that I had at that time when it was clear that I was wrong. All right, and so you can note that I'm telling you when I'm wrong, and I'm telling you when I took a loss, and I took a loss on at least the last tranches of MSTD. Now Circle is one that is also calling me out wrong. It hasn't yet confirmed, but I'm flat. I know miraculously I traded profitably, and I'm going to tell you why. It's simply that I view this as the high risk zone, right? And then this is the opportunity zone, right? So like, when you have a level that you want to trade, try to be patient to get that level, and you want to trade as close to invalidation as possible, so your risk is small. And that's basically how I trade. So I had some circle up here, but I took a lot of profit up here, and I I never bought big enough to upset that profit I have here. So by the time I got to support, I was still largely profitable on my spreadsheet. Although, of course, the tranches that I bought, somewhere in the middle, small and light, took a loss on those tranches, but the net has been very positive. So this is a good illustration of being patient with trade location. When you have a level, wait for it to get hit, take some shots and get out quickly, and then again, that's how you become the best loser. So that when you do get it right, you can run with it, with the wind in your back, right? That's how I have learned to trade well. I don't trade with a high win rate. I trade with a high skew of wins to losses. And this is absolutely no exception. So here we are. I've called out 61 as support. We've only broken it a little bit. There is opportunity to get a stick save. And so I'm not saying here that I'm ardently bullish on this. I don't want to short it here because it's kind of like shorting. I call it shorting in the hole, because you're shorting where the market's already at extreme. But I'm watching for setups. There are fair value setups that are not Elliott Wave based that I'm watching for. I have not seen any that I like. Certainly is flashing some bearish fair value gaps in there, but not large enough and demonstrable. The last demonstrable one was up in here, and you can see what happened there. So we'll see. Maybe given that it's not printing any of those bearish full fair value gaps, maybe it starts popping, goes the other way, and it would take 5 waves over 71 for me to take notice on the bull side, and then I'd watch to see if it showed a 1-2. So there's still a chance. Now below 47, there's no hope, and my projection is 22, and I will want to be short and find ways to get short. Again, but it would unfortunately be in a hole, but maybe we can get some nice reverse consolidation to get into a short at a cheap level. The other thing I was going to say about this is if it breaks down, it's following the typical, we call it the CAB IPO pattern. The theory behind it is that when something goes from private to public, it's doing so in a fifth wave that we cannot see the first 1 through 3. That's kind of the theory. SpaceX, perfect example. I've been short via the fund. I don't like leverage funds, but I could only do that because I don't know how to price vol on SpaceX yet. I actually have a counter spread now, but that's because earnings is coming up, and I have I don't care what the vol is. I'm shorting earnings vol or long earnings vol, short pre-earnings vol, so that's easy. But SpaceX is a perfect IPO pattern, a CAB IPO pattern, already trading below its IPO trade, so it's probably in a big wave too. And this one may be the same thing. And so the problem is you don't know where it's going to end, right? Because we can't see the previous 5 waves that got it to private or got it to public. So I don't know where the support level for that wave 2 is. So this may end up being like, a sort of phantom wave 2 based on a phantom wave 5 wave move, again, in the theory that we hold to. But this is statistically, again, I'm kind of a mind that I need to start a business of just shorting IPOs. Because I swear it's like I did it with Meta when it was IPO. It was down for a year, and now Meta's a great stock, but it's just that beginning throw. And so I swear I need to do a study of this and just start shorting IPOs because it's really reliable. And here we are. So we'll see if it breaks. Oh yeah, again, invalidation is here 47. I'm watching for stick save and I'm watching for short setup. I'm watching for both. It's an inflection point. It's in the support level. It's broken it. It's warning enough to get flat, to sell it all. But let's see, right? So and maybe it'll live again. But it's warning. And I'm going to say I'm wrong right now. It may ultimately say you're wrong about being wrong, but because we're in that inflection zone. All right, gapped enough on that one. Coin, again, wrong on this one in terms of not being bearish enough, much like MSTR, but unless it breaks over here, we have 5 down in wave 1, and so it's starts setting up with what should be the final C wave of this actual bear market. So coin may bottom earlier than Bitcoin potentially. It looks like it's lining up for Bitcoin to hit 30 and this to hit, but we'll see if the time frames really match up. It just feels that way right now. So I'm interested in short positions between 200 and where we're at now. This would be in the hole. It does look like a flat in B, so I do expect a rally. Of course, I got to say, guys, I've been wrong about how bearish I should be. So while a lot of people criticize me being too bear, I have not been bear enough in the last month. So maybe it doesn't get this C wave. Maybe, you know, I don't know. Maybe I'll put some of the leverage fund on. Again, I hate those things. They're really dangerous. They're really crappy engineering, but you know, I might get that because at least then I don't have to worry about vol fade. All right, so watch for that one. Watch for that short setup if it interests you. See, I'm going to hit Galaxy real quick, and then I want to talk about data stocks, and I'm going to pop up a non-crypto. I see, I've talked about this with subscribers, but I see a huge bearish setup across data centers. Not bearish setup, but just a big breakdown. Let's see. Hang on a second. Galaxy. Okay, Galaxy is hit that real quick. Just this one. We have 5 waves off this too. By no means I'm going to call this a clean setup, but I'm watching this 2 here and maybe buying some puts on that. The target is 190. I'm long-term bullish this chart, but short-term bearish. If I'm wrong at this setup, it breaks over 35. It should head to 80 before the potential of a new long-term top in the diagonal. That will change the long-term long-term chart structurally, not in a big way. But first of all, first order businesses doesn't hold this 2, which I didn't give you a level, would be at 33. So we'll watch that. Again, puts are interesting in such chart. Now I want to talk about, so Iris Energy, I'm just going to go over it real quickly, but I want to warn about, I've warned subscribers about these data center stocks. I see secular breakdown. Most of the charts in that space are going to be crypto related, like Iris Energy. This one I had expected a larger B wave top, or at least has potential. I wasn't holding out for it too much, but it broke support for that at 49, and now it's running downhill, or I think it was a little bit tighter than that. But anyway, broke support, forming an impulse. It should bottom between 21 and 14 after, and I like 21 after a corrective rally in 4. Resistance, actually I haven't done that. Resistance now is 46. Let me change that. So we have that as updated resistance with the drop. We had a calendar spread, put spread on that. That trade went well. Took it off at the end of the week, even while I was traveling, did that. And then, and so I'll probably will renew. Let's see, when's earnings on this? Depending on when earnings is, yeah, it looks like it's going to be, let's see, this is May, so it should be in August. It's possible we get another calendar spread going on. Again, I love calendar spreads because I want to trade that vol, get some turbo boost to the options. Even when the options hardly move, that it adds to the P&L. So we'll see how this forms. So yeah, just, I mean, Core Scientific, Cypher, I mean, I don't have time to go through each chart, are starting to bust. And so, you know, this is the darling of the year. And, you know, I'm not saying, I don't want to say anything like, oh, the AI bubble is here. I haven't looked at NVIDIA stock. I'm not saying that. I certainly have seen bubbles in all the venture funds. Of course, they were heavily involved in SpaceX. I have exposure to the OpenAI and Anthropic via private funds. You can now get that exposure versus VCX and RBI trading, and there's probably some other ones that are basically venture funds trading publicly. I was again, I talked about how I was a owner of VCX 2 years ago when it was a private fund only. That's how I got exposure to a lot of these things. I have made, you know, from not a lot of money, but like percentile returns, pretty incredible in all of that. But the venture funds that I still own in private are dropping in price right now. I will ultimately buy more near it when I see bottoms in a lot of the stocks. But you know, just be cautious out there because this is the darling of the year. It's hot money and it's turning around. Again, I'm not calling long-term tops. And I want to pull out SMCI. That's one company, and it's not crypto related, but it's one company that I've owned long ago in the past. And you know, I don't have a count on it because I look at my, let me see if I can read one real quick. I would call this a 1, 2, and this is a 4th wave. It may be a 4th and 3rd. I haven't gone into this, so I'll just do this real quick. And I don't know what Zach or Garrett's count is. But I'm just going to give you my quick wag. And then when I look at this, I looked at it this morning. I'm like, you know, where do I want to buy this? I want to buy this at 9 to 8. I don't know if there's a support level. Again, I need to do a lot more work on this stock, but when I do a simple 8, we'll see structure here, and we've got a lot of bearish structure going on in here. I'm interested in buying this one at 8. So a lot of these I suspect are, you know, fourth waves or something. It probably depends on the chart where, you know, the long-term top is not in yet. This one, you know, 8 to 266 would be kind of nice, right? If that's real, you know, I have to, again, consult my colleagues' charts, but you know, I'm seeing this broad, not just in crypto, you know, ex crypto turned data center stocks. I'm seeing it in other stocks. I haven't looked at Nvidia lately. So just be, you know, I'm just giving you a larger caution. It's not that they're long term, but you know, again, I always find it silly. And someone says, "Well, I'm long term bull, and now you're going to ride your stock from 52 to 8." It's not meant to be advice. It's just, you know, if you do have a perspective that's going to go to 8, you know, same thing with people with Bitcoin. I've seen people save taxes, try to save 30% tax rate on something that just dropped. You know, we're down 50% in Bitcoin. You know, maybe you just don't want to pay your taxes. It's cool. I get it. But you also have to take your losses to avoid that, right? Or, you know, my best advice is get some Bitcoin in a retirement fund so that you don't have to worry about that stuff. That's where most of my big trades were done over the last couple of years. But it's the same thing here. It's like drawdown is from 24 to, or yeah, so we're at 24 now to 8 is unacceptable to me, because you never know when the long term's gonna hold. It's just like Circle. We arrived at the level and now it's breaking. And what do? You had your hope for 266, and you thought you can handle that $20 drop. And when you get there and it breaks, you're just out, right? You're out of a loss. You're not getting it back and all that. So just managing drawdowns to me is always really critical. And so I just want to, again, without being advice, I just want to say I see a larger potential breakdown. And the question then will be, when we arrive at the key long-term supports, Iris Energy, what did I say? It's going to be 21.14. Is it going to hold, or is it going to be like Circle? It's going to break down, and then we end up with a 3-wave top. And you know, that's why I'm not. I have some Iris Energy. I cut. Let's see. I should have done disclosure on that. I'll do that at least for subscribers where I'm at with my position. I thought I cut it this week. But regardless, my position was 1% of my account. So that's, you know, I can handle a 1% drawdown. But if you guys were trading data centers with a big part of your portfolio and now taking a drawdown, you know, just be wise out there, right? That's kind of the main message. All right, that is all I've got. Any questions at all? Okay, I'm going to assume everyone's clear. I will get the charts and video up for subscribers. I will get the video link up for market watches, and eventually it will end up on Twitter as well. I will do all that today. I'm going to enjoy my weekend. For subscribers, I may call some trades as I go. Sorry about my travel schedule. I'll try to touch base as much as I can. You'll hear from me tomorrow for sure. But once we hit Monday, Tuesday, I'm going to get sparse until I get back on Wednesday morning. Talk to you guys later. Enjoy your weekend. Try to get some sunshine if we have any. Talk to you guys later.